We'll get to the CPI in just a bit, but first, a barrage of big bank beats. Wells Fargo, Goldman Sachs, Citi, JP Morgan, all surging today on the strength of this morning's earnings reports. And there's still more to come. Bank of America and Morgan Stanley both up to bat tomorrow morning. Will these reports confirm what we heard this morning? Karen, very optimistic.
Yeah, I think so. I mean, this was really, really good on so many fronts. And for all the banks, I think a lot of things went right. Net interest income, very good. Some of the capital markets business, really good. For some, investment banking better than for others. But I think that the consumer is in good shape. And, you know, I think the animal spirits idea, we'll see mergers. That's great for investment banking, even if we didn't see it in this quarter. So there really was a lot to like for both Citibank and JP Morgan. I, of course, listened to the JP Morgan call first. But, I like the idea of Jamie. It sounded to me like staying a few more years, maybe. But I think things are going on just about all cylinders. It was really an excellent report across the board. And I think the read-through for the economy is really good as well, not just the banks, but more broadly.
Yeah, the CFO of JP Morgan specifically used the phrase animal spirits. We are in animal spirits mode right now. The Goldman Sachs CEO said something to the effect of there's been a meaningful shift in CEO confidence since the election specifically. So we're setting up, Tim, for what may be a very good age for the banks.
It is. And while today I still think market action was really about a CPI. We're going to talk about that. I do think the bank messaging was fantastic. And I think when you think about JP Morgan and Citibank and you think about old versus new, JP Morgan has really kind of kept pace with both innovation on the fintech side in terms of balance sheet efficiency. Citibank, the big issue all along was that they were not. There was always so many inefficient investments. There were disparate places around the world where they were deciding to take a shot. What we heard today is that actually the long-term capital prognosis for this bank is fantastic. A $20 billion essentially repurchase, and the dynamics around the cost efficiency that will get better in 26 from what we hear means I think there's a lot more to go at Citibank. And I know this means nothing if you drew a chart back in Citibank, obviously because of all the dilution there. This is still a horrific story. You're back at like Jan 2008 levels or Jan 2009 levels after still being down almost 80%. But it's tomorrow's money. And I really think Citibank is an incredible story that has an ability to outperform, but banks did send a great message.
You used to sit in the CEO seat, Joe, so how would you feel with this backdrop?
Well, I think one of the things that you need to pay a little bit of attention to, I think we went, is it 793 days or something like that with an inverted curve? Karen's already referenced the significant growth that we've seen in the net interest margin. With a positive yield curve, that's only going to enhance the earnings as far as the banks go. So, I mean, I could not be more bullish on the financial sector at all.
Yeah.
First of all,
yes,
as you said at the top of the show, this is a man that's been a friend of this show since the inception. Was steadfast.
Which isn't easy to do, by the way.
Not easy to do.
Given who is on the show.
Fordham University, by the way, one of the great Jesuit institutions in the country, home of Vince Lombardi. Alex Wojciechowicz, one of the 7 blocks of granite. They named their football field what? Moglia Field. So
a legend is amongst us.
Myths of greatness. Yeah. What was the question? I'm kidding. No, I think, Tim's spot on about Citibank. And we have actually, listen, as wrong as I am all the time, Citi's one we've gotten right. And we have pointed out today, for example, they said tangible book is basically $97. And we have made the point that, listen, I get JP Morgan at 2.5 times tangible book. Maybe it's deserved, but Citibank at like 80% of it doesn't make a lot of sense. So I thought for a while Citi could trade up to 80. Here we are. But now that they've sort of raised the bar, I'm with Tim. I think it can go higher from here.